There's a certain insanity in the market today. In the face of a stalled out market, you hear realtors everywhere crying out, "It's still a seller's market!" As if that's supposed to duly impress you with the robustness of Dallas, as well as motivate you to buy like yesterday. Now, the problem is, as well as I do, that Dallas real estate is not acting like a seller's market. And what do the pundits have to say about that one? Here's the way I see it. The market is not behaving itself. It's not doing what it's supposed to do. And today, we're going to figure out why. Well, hello. This is Wendy Pinnell, and Julius Mansa explains how the housing market relies heavily on supply and demand, which is a much looked at indicator in the industry. And boy, is it ever! You'll be hard pressed to watch any video, including mine, where supply is not mentioned as a major issue impacting the Dallas housing market. Mansa goes on to explain that when the demand for housing is high but supply is low, home prices often rise. Well, in Dallas, low supply is exactly what we have. Upforgrowth.org recently completed a study that the Dallas Observer commented on. They said even before the current housing crisis hit, the Dallas-Fort Worth area wasn't producing nearly enough homes. They went on to describe that Dallas-Fort Worth ranked the worst for underproduction in Texas. So we have a supply shortage in Dallas. How is this affecting the housing market? Oh, better yet, how should it be affecting the housing market that it isn't? Wait, what? To fully understand that, we need to explore what's known as months supply. According to the National Association of Realtors, months supply refers to the number of months it would take for the current inventory of homes on the market to sell given the current sales pace. Analysts use this idea of months supply as a metric to see where things stand with supply and demand in the housing market. Less than 6 months supply is considered a seller's market with rising prices and not enough homes, whereas more than 6 months would be considered a buyer's market. You'd have way more houses and less demand. Where does Dallas stand in all this? Well, let's hop onto my computer and take a look at months supply in the Dallas area. Here we have Dallas County. At our high point, we were at 3.7 months, and currently we are at 1.8 months. Moving on, we have Collin County. In June of 2019, they were at 4 months, and they are currently at 2.2 months supply. Next, we have Tarrant County, and we can see again, 2019, 2.6 months supply, and now we are at 2 months supply. That would be a seller's market across the board, which ought to mean rising demand and rising home prices. Let's dig into last month's sales to get a little corroboration on that. Right here we have Dallas County, and we're looking at a year. We can see right here we had that peak in value, right? And that's about when the Fed was raising interest rates, and from there we went down here, and we kind of saw a steep drop from June to September, and then we actually saw a little bit of upward momentum and then a pretty sizable drop between November and December. Moving on to Collin County, we see a similar trajectory here where May was their peak value, and then we saw a considerable drop through October, eased up a little bit, inched up in November, but then another drop in December. Next up, we have Tarrant County, and you can see again similarly how they had a maximum sales price there in July, and then we saw a drop again, just a slight inching up in November, but then another drop in December. The market is simply not doing what the market should do. Here we are with low supply, but with demand that's even lower. The month supply metric is clearly showing low supply, which ought to be driving prices up. Instead, we're seeing even lower demand than we have of supply, and prices are dropping instead of increasing. So why? If we know we have a seller's market here in Dallas, we know we have low supply, why is the market not reflecting it? Well, we have two issues at hand: interest rates and affordability. Every time interest rates go up, affordability gets worse. Texas A&M issued a study on this. In their Texas Housing Affordability Outlook, they show how in 2011, the ratio of median home price to median family income was 2.42. In 2022, that ratio was 4.13. Now, if you look at this table, you can see family income has increased by 13.6% between 2021 to 2022. The problem is interest rates are taking away any affordability that higher income and lower home prices could bring. Let me give you some insight on that, but before I do, are you getting value from this video? If so, would you mind hitting that subscribe button? Thank you for doing that. Now, let's just say that in December of 2021, you purchased a home in Dallas County at their average sales price of $454,000, okay? Your interest rate would be a beautiful 3%, and your mortgage payment would be $1,914 a month. Now, let's compare that to if you bought a home a year later in December of 2022. Your average sales price would be a lower $450,000, but your interest rate would be 6.5%. Your mortgage payment would be $2,844 a month. So true, your salary has increased 13.6% in that year, but the same home would cost you $930 more per month. Claire Trapasso with Realtor.com describes it this way. She said the median mortgage payment is now about 77% higher than a year ago. She describes very accurately how rising interest rates have entirely upended the affordability equation. In fact, according to Trapasso, for those payments to return to where they were just 1 year ago, home prices would need to plummet by 45%. In a world where supply and demand is supposed to reign supreme, instead, it's interest rates and affordability that are calling all the shots. So every time you hear someone clamor that Dallas is in a seller's market, just know, yeah, it is. It's just not behaving like one. Now, that's all going to change when interest rates go down. When interest rates go down, affordability will go up, and we'll see a seller's market behaving like a seller's market should. Demand will return, prices will begin to go up again, and buyers will have missed out on buying at the bottom. If you're wondering when the switch is going to happen, when interest rates are going to go down, you're definitely going to want to check out this video so you don't miss out. In the meantime, Wendy out.